Good evening, everybody. Welcome to our last session for 2021. So even though it's been kind of a dismal year in some areas, it's been a very good year for trading. And that kind of brings us to the realization, or let's say the reality, that if you watch all these talking heads on the financial news stations, they're all asked what the market's going to do for 2022. And they'll say, oh, it's going to be up. It's going to be, the S&P will be up mildly, or blah, blah, blah. They have no more idea about what the market's going to do in 2022 than the man on the moon. And I've discovered that through 40 some odd years of investing, that number one, if you think of anybody last year that accounted for what the market was going to do this year, and I bet you died of donuts, you can't remember who it was, number one. And number two, I bet you the previous year they had it wrong, or this year they'll have it wrong. So I've discovered there is only one true indicator of what the market's going to do, and that is the market itself. Because we don't know what's going to happen worldwide, whether another pandemic starts up, whether China takes over Taiwan. I mean, there's so many things out there that we can't even foresee, that you just have to kind of let the market tell you what the market is going to do. Now, there are some little tricks for figuring out what sectors are going to act strong. And we'll kind of allude to those as we're going through all this tonight. But the one factor, I mean, there's always the truisms to the market. A Santa Claus rally. Well, is this a Santa Claus rally? We might contest that when we analyze the charts from today. Or the market is usually going to do what it does in the first 2 weeks of the new year. There's all sorts of supposedly truisms. But I've discovered the only way to confirm or non-confirm a truism is see what the market is actually doing. So there's the reasons there's truisms, because the probabilities, or the, let's see, not the probabilities, the percentages may be in favor of something happening based upon how markets react during specific time frames. But then again, you always have the truism of whether the market's going to go up or down based upon whether the AFC or the NFC wins the Super Bowl. So the only true indicator of what the market is doing is the market itself. So as we go through this, how do we take advantage of that information? Well, today, look what happened in the markets. Right at the same level it topped out before, we sold off. Now remember, if we're in a Santa Claus rally, it's supposed to, and the definitions of a Santa Claus rally are completely across the board different definitions. Some people say it's 5 days before Christmas and going 2 weeks into the new year. Some people say it's 2 days before Christmas and 2 days after the new year. Ugh, no sound. Jimmy might have to help Chuck and Frank. They might have to check their little icons to make sure they got the speakers up. Okay. So this is why you want to know what information is built into candlestick signals. At the same level it topped out before, today when they sold it off, look what happened. Kind of a shooting star, bearish engulfing in the overbought area at the same level it topped out before. We might have, let's see, there's only one more trading day this year. We might have for the next 3 or 4 days, they bring it back down to the T-line. So this is why you always watch to see what the market is doing, not what the consensus truism are supposedly doing. An additional factor to that is you don't have to depend on one index. Look what happened to the NASDAQ. As it got up into this resistance area, today it was trading stronger. That looked pretty good. Except by the end of the day, it was trading below where it opened, down 25 points. That kind of confirms the fact that there was selling in the NASDAQ. And then in the S&P 500, you could pretty much draw a resistance level right through here. You could probably get a little bit closer. But the fact that they did doji, bearish left-right combo, at the same time the NASDAQ was doing a shooting star and the Dow was doing a bearish engulfing left-right combo. Is there an echo, RC? Check to make sure you're not logged in twice. No, I don't see you logged in twice. All right. Chart staying on DJIA. Lee, who is it? Yeah, somebody, if you're stuck on a chart, hit the red X up in the top right-hand corner, log out and log right back in. And right now we're on the S&P 500. Okay. How do you tell which sectors are going to act the strongest in the first quarter, either positive or negative? And the one factor that I have discovered through 40 some odd years of trading is whatever sector or stocks come out of the chute strong on the first 2 or 3 days of trading of the new year, you got to factor what the logistics are of that. Probably right now you've got money managers all over the world reviewing what their performance were this past year, what stocks were strong, what stocks were weak in their portfolio. They're closing out things that didn't work well. and they're sitting there thinking, all right, what's our analyst thinking is going to be strong coming out into the new year? And so they're all sitting there cogitating what sectors are going to act well. And that's what they're making their decisions on as soon as they've cleared out some of their portfolio going into tomorrow, and then they get ready to start buying after the first of the year. So a high probability statistic is whatever you see coming out of the chute very strong on the first couple of days of the new year trading, it's going to have a high probability, like 80% or greater, that they're going to act fairly strong going through January and maybe well into the first quarter. So we're going to kind of pinpoint some of those. I was going to try to make this a relatively short session tonight, but I've got tons of charts, so keep your hot chocolate close by. Here we go. Now, the first thing that we're going to start recognizing or anticipating, not evaluating, is when do you enter a good trade? When you see a good pattern setup. We recommended METC today based upon a positive open. Well, it opened positive. Now, what's the trading strategy based upon human nature? A lot of people say, well, if it opens positive, so many times they open a positive and they start trading off. Well, that's why if you're sitting here watching it, if they start trading it off, what's that tell you about the investor strength? It's not there just yet. So when would be a good time to be buying this stock if it opened and started trading lower? When it stopped taking profits and came back up through the open, because why would we be buying in the first place? We're buying in the first place because we got a fry pan bottom that broke out through this level. We want to be buying on strength. So that puts us into our next step of an entry strategy. It's opened positive and traded lower. Where would be a good time to be buying this one? If it comes back up through this level. Might take it a day or two, or it might take just one day to come back up. But the reason we want to be ready to buy is because this pattern, like about the 6 or 8 candlestick patterns that we're familiar with, the fry pan bottom is a buildup of investor sentiment. And once that investor sentiment is confirmed by, which one was it? Oh, thought I would do a nice clean segue. Whenever we can recognize a pattern and we can recognize the signal that breaks out that pattern, in this case, look at our trend kicker signal. Now, what do we know about a trend kicker signal? We know that if you're in a trend and you do a trend kicker signal where they open here, close here, and then they gap up and go the opposite direction, there's still a lot of strength in that price move. And what do we expect coming out of a fry pan bottom breakout? A strong price move. So the reason we illustrate this is we're still long RDWR, and look what it did today. It was still trading positive on a day that was gotten pretty soggy. And this is where knowing your other indicators, your trend indicators, allow you from getting whipsawed in and out of positions or getting out of positions too early based upon some very simple trading rules. If you see a fry pan bottom breakout, what's our next criteria for closing out the position? Basically stay long as it stays above the T-line. Let me do a quick survey just so I know I'm explaining the indicators thoroughly enough. How many people in here are new to candlestick trading and the candlestick forum sessions? If you are, just type in Y. Okay. All right, a good number. So I'll review this. Well, a lot of people. Okay. Um, Here are you can see how the charts are not that, what am I going to say, cluttered. We've got the 200, which is the red line. That's the 200 simple moving average. The blue line is the 50-day simple moving average. We don't have those on our charts for us to make an analysis. We have those on our charts because we want to see what everybody else's analysis is, or what their reaction is at those moving averages. Every major money manager around the world uses the 50 and the 200 simple moving average on their charts to make major decisions about their portfolio. We use it to see what their decisions are at those levels. Secondly, we got the 34 on here, this little gray line. It works reasonably well. When I say it works reasonably well, it works well enough to have it on your chart. Now, the nice thing about candlestick analysis is that we know that prices move the same way time after time based upon human nature. That's why we have candlestick signals that the Japanese rice traders have illustrated to us over 400 years of their analyzing human nature. We also have patterns. We know that investor sentiment works the same way time after time. They produce patterns. We can recognize those patterns, and so the top criteria for any of our analysis is there a pattern, is there a signal, and is there a combination of that? Anything else that we add onto our chart just helps us confirm that those signals and patterns are working. So the 34 is an EMA, but here's the most important one, the T-line, the 8 exponential moving average. A very easy method to keep your emotions out of your trading. If logic says that the candlestick signals are the graphic depiction of human nature, the T-line acts like a Fibonacci characteristic. It acts like a natural support and resistance level of human nature. So when you combine those two, the natural graphics of investor sentiment and the T-line acting as a natural support and resistance level of human nature, when you combine those two, you've got an extremely powerful combination that tells you what investor sentiment is doing and what the trend is doing. Simple trade rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line, with the caveat that the further away you start moving from the T-line, the higher the probability it's going to come back and test it. So why is this important? Because our human nature is, oh, we got a good profit, and what's my concern now that it's up here in the overbought area? My stochastics are 12.33. You're in the oversold area when it's below 20. You're in the overbought area when you're above 80. I'm up here in the overbought area and I might see some selling. However, as long as I don't see a sell signal and a close below the T-line, I can stay long. That keeps my emotions out of my trading. And the reason I point that out is because I was the worst investor in the world before candlesticks came along. I was even a stockbroker for 8 years. So there's a whole bunch of people out there you have to feel sorry for, because I was recommending what to do with their stocks. But I was like every other human. I was afraid to buy when it was oversold, and I would buy exuberantly at the top. And that's exactly what the candlestick charts reveal. Could that be a hammer candle top warning sign? Yes, it could be. So what do we know about a doji in the overbought condition? We have a doji rule. It's going to continue in the direction or trade in the direction of how they open after a doji. So we're long right now, so where would be a logical place to put our safety stop? Right here, below the low of today's doji. Because logic says if it opens lower and starts trading lower, enough to come back through this level, the probabilities have now told us they're starting to take profits. That's where we want to be closing out the position. I think I've got a few more to kind of illustrate that. Yeah, I do. So here's what keeps your emotions out of your trading. Those simple rules. If you see a candlestick buy signal, a close above the T-line, a pattern breakout, you can stay long as you stay above the T-line. Now, another session will be this little green line is the 3T line, which works effectively for telling you when to get in, and when if you start moving too far away from the T-line, it becomes a faster indicator to tell you get ready to start taking profits. GRPH, here's a function of the T-line. Notice how once they broke out, this is what we call your doji sandwich. A big candle, a doji, another big candle, the doji, doji sandwich tells you there's going to be more upside. What happened to the trend? They couldn't close it below the T-line, and the T-line crunched it right up through the resistance level. What is a triple T-line? There is no triple T-line. We have a triple T training, which includes all the aspects of the T-line and the 3T line. But it's the T-line that we're most concerned about, that black line. So the reason we want to buy patterns is because a pattern is an investor sentiment buildup. It's not a one-day reversal. This is a buildup of investor sentiment. And you can see what our recommendation of HIB did today. It continued to trade positive even though the markets reversed or started heading down. That fry pan bottom, again, is a much stronger indicator of a buildup of investor sentiment. So the reason we like to use patterns is threefold. One, it gives you an extremely high probability you're in the right direction. Two, the magnitude, oh, I'm sorry, Roxana, is that what you were asking? The 3T line is the 3 exponential moving average. That's this little green line. Now I forgot what I was saying. Darn. Patterns. Patterns have a high probability you're going to be in the right direction, number one. Number two, the magnitude of the move is usually much stronger than just merely an uptrending stock during a uptrend. And three, if the market reverses, because this is a buildup of investor sentiment, you probably have a little bit more time to get out profitably because it takes a while for that investor sentiment to kind of reverse. So when do you get out of positions? Not only do the candlestick signals tell you when it's time to buy, but they also tell you when to get out of a trade. We had recommended yellow trucking, but today, when it came back down through today's open, and especially closed back below the T-line, this is just visual common sense. What is the trajectory of this trade right now? It's not good. So the basis or the premise of successful trading is not only identifying when to be buying, but identifying when you should be closing out a trade that's not working well. So I already know that I can keep my emotions out of my trading because I know that approximately 30% of my trades are probably not going to work. Now, previous to acknowledging that statistic, I just beat myself up. I would question my stupidity. I would say, does this system not work? When I was first in the brokerage business, the statistic was that if you could make 50% of your trades, especially in the futures trading, make 50% of your trades correct, you'd make a fortune. So through the years, I've discovered that approximately 70% of my trades are successful. Now, some of them might be 0.3%. Others might be 300%. That seemed pretty good. I should be making a lot of money. But what I was not acknowledging is that the 30% that didn't work, instead of taking it personally, just tell yourself, all right, that didn't work, close it out, and go find a trade that is working. So the major benefit I got out of candlestick analysis was that it tells me when to get into a trade and it tells me when to get out of a trade. Not because I'm analyzed something wrong. It just tells me if situations changed after that trend started, I need to acknowledge it and close out the position. If I know what signals tell me it's time to close out a trade. You had a good successful trade in CF, except look what was happening up here. There was our doji. What was more of a warning sign? Well, they'd gapped that doji down toward the lower end of the previous day's trading. Now, up here in the overbought condition, that's a little bit more important. And what is our doji rule? Our doji rule is the price is usually going to move in the direction how they open after a doji. So when it opened lower today, that told us if they started trading this lower, close out the position. Because where do you think the next target's going to be? Back here to the T-line. No, Ron, or I'm sorry, RC. On any time frame, if you learn the definition of a candlestick signal, it is the graphic depiction of everybody buying and selling during a specific time frame. That specific time frame could be a 1-minute chart, a 5-minute, 10-minute, hourly, daily, weekly, or monthly. It all works exactly the same. Let me just test something here. Oops, I want to go to the 10-minute chart. Okay, so that's where it opened today. So this is what a 10-minute chart looks like. Doesn't look any different than a daily chart, and the parameters are just the same. Notice that once they opened this lower, they couldn't really close this above the T-line. And you can use that for anything. A lot of people say, well, does this work for Forex? Does this work for the dollar? Excuse me. Right now, you can analyze, this is wheat. Notice how wheat did a bearish left-right combo. And then it closed back below the T-line. Today it opened a little bit positive, but failed to get up through the T-line. So what's our assessment? We're still in a downtrend. How do you trade this? I usually trade it off the 10-minute chart. And if my first assessment is we should be in a downtrend, I'm usually trading pretty much to the downside. Anything on the long side is going to be a lot quicker. But you can do that with any trading entity, whether it's the dollar, silver, gold. Because if you go back to the basic analysis or definition of a candlestick signal is a graphic depiction of everybody buying and selling during a specific time frame. It doesn't matter what it is. As long as there's fear and greed, which is every investment in the world, it works effectively. Oops, I'm getting way off base here. I'm going to do this fast enough. So we're not here until the cows come home. So you can see the logic that's built into candlestick analysis. The Japanese rice traders always tell us where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. How can we tell there's exuberance at the top? Look how far away you started moving from the T-line. And look how big the candles were getting. And look how they gapped up in the overbought condition. Anytime you see a gap up in the overbought condition, or a gap down in the oversold condition, you start looking for a reversal. So there's your shooting star signal after gapping up. Where would you have taken profits? If it traded back below the low of that candle, because where do you think it was heading to? Back to the T-line. Is the 10-minute chart exponential or simple? That's, James, that's not a relevant question. The 10-minute chart is the 10-minute chart. All the indicators are exactly the same. Your 200, your 50 are simple. Your T-line is the 8 exponential. So the indicators are all the same. So when do you get prepared to take profits? Look at Fastenal. Fastenal looked like it was doing an uptrending channel. And this is the one point that I always try to reiterate to everybody. Here was what our anticipation may have been, is this uptrending channel. So where would you think the next likely target was going to be? Back up here to the top of the channel. However, what is the most important element of a candlestick chart? It's the signal themselves. So today, Fastenal, getting up toward the overbought condition, did a bearish engulfing signal. That is more important than anticipating that it's going here. This is what they're actually doing. Now, why is that bearish engulfing signal relevant? Because look where it occurred. Right at the same level they topped out before. That is more evidence that this was the time to start taking profits on this chart. So you don't have to be a rocket scientist. No, that's not the right word. You don't have to be a sophisticated analyst to analyze what the price movements of human nature is telling us. Same scenario on covering short positions. Look at our bearish best friend signal after a big bearish engulfing signal that failed at the T-line. Then yesterday, in the oversold area, we started seeing some buying. You are a rocket scientist? All right. We started seeing some buying. Now, with very simple candlestick logic, where would be a place to stop out of your short position? If it came back up through this level. Because logic says if you're seeing a buy signal, in this case kind of a meeting line, if they started trading positive up through this level, it's time to take profits on your shorts. Because if they're trading positive, where do you think your next target's going to be? They're probably going to take it back up to test the T-line. If nothing else, if you don't walk away from any candlestick analysis information, just use the T-line on your chart. And this is not a hard method to test to see whether it works or not. You can put it on your chart and see how often it confirms the uptrend or downtrend. We were long Toll Brothers, but today Toll Brothers did a bearish harami. Not quite in the overbought area, but look what was happening right here. You had 3 days where they couldn't get up through this level. Makes this very simple. If they open this lower tomorrow, you close out the position because they're at least coming back to test the T-line. And more than likely, if they're doing that, it's because the markets are still selling off. So what is the trading rule at this point? If you're going to stay long, it better open positive and trade positive tomorrow to stay in it. Otherwise, a bearish harami tells us the buying has stopped. If they open it lower, that means the selling has started. Blue, you can see what happened here on blue. That day you might have closed it out or said, all right, it better open positive and trade positive, which it did. So if you're long on blue, you can see one relevant factor. They haven't been able to close this below the T-line. So everything we look at on a candlestick chart is essentially just what are the probabilities of our trade. If we're still seeing buy signals and we're still above the T line, we can stay long. Our low, we're still staying long. GRTX. Observe the obvious. They couldn't close below the T line. Now, I say observe the obvious. What is not obvious to everybody else is nobody has the T line on their charts. So when we see it pull back to that level, it's not like it's pulled back to a level that everybody's watching to see if it's going to support, because nobody has that on their chart. That is more, credence to say this is a natural support and resistance level of human nature. Because as often as it supports at this level that nobody has on their chart, is just kind of a good clue that this is telling you that's where the natural support and resistance level is. So even though we don't have a confirmed buy signal here, you can see after this bearish doji sandwich, which is a powerful sell signal, that we had an inverted hammer, we had a doji, and now we have another doji. And where is this all occurring? With our stochastics in the oversold area. And it's doing it right at the same level it bottomed out before. What's that pretty much telling us? That the probabilities of it heading lower is getting smaller. This is probably a good area to start taking profits on your short trade. What's the worst case scenario? It comes back down through, let's say, this level. You can re-short because that tells you the downtrend is still in progress. This looks like it could be heading up. And when I say it looks like it could be, again, we've had an inverted hammer, a doji, a doji, and it's flattening out in the oversold area. Let's go find another one that looks more like this, showing us our probabilities are much greater to the downside. So some of the biggies. Today we started, or I bought some calls on Apple because it had opened positive and trading positive, doing kind of a double doji setup. Then look what happened at the end of the day. They sold it off. What's that kind of inferring? That this area right here is now acting as a resistance level. What's our probabilities now on this one as far as going up? Doesn't look very good. That means close out the position and move on to something else. We'd bought NVIDIA a few days back. I'm going to make this bigger because it had a reverse right here off the 50, inverted hammer, gap up through the T-line with a doji sandwich. And today, when it opened and traded positive, what was that telling us? That was telling us our support probability was the T-line was acting as support. Our uptrend was still in progress. But what happened once it came back down through the open? If that candle turning green indicates that the bulls are in control, what happens when they come back down through the open and start turning that candle red? Pretty much tells us the bears are in control. And where were the bears in control? Right here at the T-line, which is not what they should be doing. They should be trading positive. Tells you to close out the trade. So today's lesson is kind of a indication of a lot of times you know when to buy, but there are indications when it's time to sell. Netflix. We were going to buy this had it stayed up positive today, because that would have been a nice J-hook pattern off the T-line, making what your next target, the 50-day moving average. But the fact that they closed it back down here doing an indecisive candle said, no, we don't want to pay attention to this now. Obviously, that was a function of the market trading lower. So the signals pretty much tell us what everybody's doing at levels that everybody else is watching. oops. If that's kind of a resistance level, and they pulled back after they failed at this level up here in the overbought area, pulled back a little bit, indecisive. And then today it was starting to trade positive, looked good, looked like they were supporting off the 50. But then when they started coming back down and or trading back below the open, what was that more evidence of? That they weren't going up through this level. You should be out of this trade. Excuse me. Now that doesn't mean you give up on this trade. This means you don't want to be in it right now. So where would be the next logical place to be buying? Well, if all of a sudden they turned this around, supported off the 50, stayed above the T-line, and started coming back up through this level, now we can see you had a J-hook pattern that was breaking out through the resistance level. Everything we do when we do analyze what's going on in human nature is recognizing what type of patterns, what are the signals telling us, and what's that tell us about our probabilities. Well, if it did a J-hook pattern up through here, we know wave 1, wave 2, wave 3 is going to be the same magnitude as wave 1. So everything is already pretty much calculated because of the reoccurrence of human nature reacting the same way time after time. Now you can recognize the pattern that could set up here. You can also see when you don't want to be in trades at all. Well, right now I wouldn't be long or short Amazon. There's just absolutely no direction on this one. So sometimes you look at a chart and it looks good to be short, and there's other times you say, let's go find something else. Do you wait to the end of the day to judge the candlestick? JC, yes, or the beginning of the day. Let me see if I've got one that I can illustrate. Now, I don't necessarily always wait to the end of the day. Today was near the end of the day they started selling off. If I was buying tomorrow on this one, IINN, you can see the little J-hook pattern supporting at the T-line. Logic says if this opens positive tomorrow, it's probably confirming this big pattern. I want to be buying. So if it moved up here after opening right here, and then during the day it came back down through the open, I would close it out. Because what was the point of buying this in the first place? When it opened positive and started trading positive, it told us the bulls were in control. As soon as it turned around and came back through the open, what did that tell us immediately? The bulls weren't in control, the bears were back in control. You close it right back out again. That could happen at 10:30 in the morning, that could happen at 2:30 in the afternoon. What do we want to see if we were buying this one tomorrow? Bullish confirmation that it was staying above, especially above where it opened. Let's see, I've got a whole bunch here that have different. So pen, oh man, what are these things? Remove horizontal line, remove horizontal line, remove line, geez. Enough to knock a buzzard off a honey wagon. So you can see what's setting up in pen. There's your little morning star signal, telling you there's probably more upside, which means you might have a big fry pan bottom. If you buy and trade starts moving against you, do you exit or wait for it to hit your stop? Wait for it to hit the stop. Just because you buy, let's say I bought right here and it traded up and then traded back down, or let's say I bought here. Nah, that's not the right way to do it. Because as we saw on this one, we wouldn't have bought it at all because as soon as it opened, it started trading lower. Now, if it turned around and came right back up through the open, that's when we'd be buying. But then if it turned around and came back down through the open again, it would probably close out the trade because it's not doing what it's supposed to. Remember, identifying the pattern and the signals have one strong aspect to it. That when we see that pattern or that signal, confirm our expectations are that it's moving in the direction that we expect. Everybody else has got sound, right? ZH. ZH, a little morning star signal. What are the probability factors on this? If it starts trading positive tomorrow, you can be buying because you got kind of a basing period here, a hammer signal, and a close above the T-line. What's that close above the T-line tell you? There's been a change of investor sentiment because you can see the T-line's been acting as a resistance level all the way down. Now you have a change of investor sentiment. DQ, same scenario. Doji, bullish confirmation. So if I was buying tomorrow and it backed off a little bit, I wouldn't be concerned as long as it doesn't close back below the T-line. Because it's not unusual that they open it up, trade up a little bit, and then back off. Because what was the investor sentiment prior to this reversal signal? Pretty much bearish. So if it opens positive, there might be some of that bearish residue left. However, we've got the T-line to tell us as long as they don't close back below the T-line, we're still in a positive trade. Do you look at the pattern first? No. Usually it's the other way around. You see the signal first, and then you instantly can visualize whether there's a pattern there. What are your thoughts on China stocks with their huge move today? I would be a little bit reserved yet because this might be some sort of short covering. I don't know whether what their tax situation is. So something like Bigalow has a bullish engulfing signal. Something like Baba doesn't really have a reversal signal. So why is that important even though it's up? Because if you have an up day that's not a reversal signal, remember the Japanese race traders have had 400 years of analyzing what these moves tell us. If it's not a reversal signal, I don't really pay attention to it. I only get ready when I see an actual reversal signal because we know what the probable results are from those. What advice can you give for a day trader regarding entries? I live in Australia, not when the market is open. Annabelle, day trading is a function of how much you can be at the computer. So if you can't be at the computer at the U.S. Open, you can only day trade at the times that you're sitting there. Otherwise, you're just kind of, if you're day trading, you're just kind of shooting in the wind. Greg, yes, there's 12 major signals. Out of the 50 or 60 candlestick signals in the candlestick universe, over the years, we've narrowed it down to 12 major signals, 6 longs and 6 shorts. And the reason we've narrowed them down is because the remaining 50 or 60, other than those 12 major signals, don't occur often enough to spend mental time and energy trying to learn them. If you learn the 12 major signals, they occur almost every single day, and they are going to produce the big trades. I'll point them out as we go along. I don't know. On Baba, it might go up, but again, if I had my druthers, there are dozens of reversal signals versus just up days. I'd rather go with things that I know what the expected results are. So I'd leave something like this alone and go find a reversal signal. Slow stochastics, Roxana. And remember, we're using stochastics as an indicator. Very simple logic. The Japanese rice traders, isn't that a piercing signal? No, a piercing signal is where they open it below any of the previous day's trading and close more than halfway up that candle. I forgot what I was saying to Roxana. I forgot. I guess I should only answer one. Oh, remember, stochastics, the Japanese rice traders make it very simple. A signal is not a signal unless it's occurring in the right conditions of the market trend. A candlestick buy signal in the overbought area doesn't mean anything. A candlestick sell signal in the oversold area doesn't mean anything. You're looking for a candlestick buy signal in an oversold area, and you're looking for candlestick sell signals in the overbought area. If a signal occurs somewhere in a trend, it's just a day. It's just a formation. It's not a reversal signal. Now this is who was asking about the best signals. This is a signal. This is what you call a kicker signal. Notice how it opened here, closed here. Today they gapped it up above the previous day's open and went in this direction. The investor sentiment was kicked in this direction. This is your strongest individual candlestick signal. This one has high probabilities that it's going to go higher. This one's got a little J-hook type pattern. This signal right here is kind of a hammer signal. The tail is 2 times greater than the body to the downside. That's just occurring in a trend though. So your trend or your fry pan bottom J-hook pattern is working. Now big price moves occur. Notice what happened on this one. For months, nothing. Then something new happened. This is one of your strongest signals. This is what we call your best friend signal. It's a doji followed by a gap up. The reason we call it your best friend is because the probabilities of this moving higher is extremely strong because of the best friend signal, number one. And number two, the magnitude of the move is usually very strong. This is your morning star signal, a big down day, a day of indecision, and the third day closes positive more than halfway up this candle right here. So you've got kind of a scoop pattern. That's a flat handle. Notice your little scoop. This one probably has more upside. Again, the probability factor is when you see these signals, that's what the Japanese rice traders cannot see. Cannot see what, John? We will do a session pretty soon on the big price moves. There is your best friend signal. Kind of a little inverted hammer, doji, gap up, scoop type pattern. What would you expect from here? At least a 45 degree. A 45 degree is just kind of a steady uptrend. So the important factor on this is what we use, what we call our rare process. When there is a gap up, can it be filled? Yes. But it might not be filled this month, this year, we're not concerned about filling this gap. We're more concerned with what's happening right now as far as anytime you see that doji gap up, what's that telling you? Just simple logic says after a day of indecision, they gapped it up and told you what their decision was. That's usually a very powerful indication that the bulls have taken control. Pat, if you saw it. Now, if I was watching it during the day, this is the training we do because candlestick signals work effectively on all time frames. When would I have been buying this? Would I have been buying it here? A lot of people say, oh, I don't want to be chasing it. Well, you can mitigate that very simply by going to your 10-minute chart. 10-minute chart showed up, might have taken some profits here, but notice what happened on your 10-minute chart today. They couldn't really close it back below the T-line. That told you I can stay in this as long as they don't do a sell signal and a close below the T-line. Stochastics are 12.33. What do you do the next day on this one? You want to see it open positive. What you don't want to see is it opening down here. If they do that, you close out the position immediately, especially if it starts trading lower. Then the worst case scenario is you can buy it back if they come back up through today's open. But as long as they stay below that level, the statistics probabilities say you don't want to be in it until it comes up through that level. So we will do a training in the members area here soon that when you start seeing breakouts, how do you trade them? And again, this is very simple. Look at this is what we call your inverted hammer. Notice how they took it up and then they pulled it right back doing an inverted hammer, one of your 12 major signals. Then the next day they opened up positive. We have a statistic, and this is only my statistic of 30 some odd years trading candlesticks. If you see an inverted hammer and they open up positive the next day, you have a 95% probability or greater that you're going to start trading positive. Oh, whose handwriting is this? Same scenario on this one. The first thing, there's two steps for trading these. One, is you go to your, what we call the RARE process, research analysis, reverse engineering. Meaning if we see a big move like this, the first thing we want to do is go see if there's news that was worthwhile for making that big move. Then second, we watch to see what it does. Now remember our doji rule. It's going to move in the direction how they open this after a doji. If it opens positive, that's when you can start buying. That tells you the bulls are still there. Is that a belt hold? No. A belt hold is when they gap it way down and then they bring it back up into the trading range. I'll see if I can find one somewhere. So there was that big breakout move. It didn't confirm the next day. If I had been long on this day and it opened here, I closed it out. Then notice what's happened. They've gapped it up after trading it lower and did a doji. Now that gap up is an alert for one of your strongest signals. Remember when we said the kicker signal is your strongest individual signal? If this opens positive, what's our doji rule? Doji rule says it's going to trade positive. And if it trades positive and does a green candle, what type of signal does it do? It does what we call bullish flutter kicker signal, which is that if you took this little flutter out, you have a kicker signal. The benefit of a flutter kicker signal is you might not have seen this day, but when you scanned at night and saw that this was a big percent mover, If it opens positive tomorrow, you're ready with funds and ready to buy immediately. And then you know what your strategy is. You better trade positive. If it opens positive, where's your stop? Right back here at the doji, because if it comes back down through there, it's telling you they're not going up. Nicholas, it's a added plus to see a breakout situation on big volume. And it usually, more than likely, is going to have big volume on a breakout day. So look what happened here. This was not a very confirming indicator, except it told you there was a major change of investor sentiment. You got ready to start buying. Look at your little J-hook pattern. Where do you think the eventual target's going to be from here? Probably back up here because that's where it traded to. Okay, I'm trying to read this real fast. Would they do go into partnership with somebody? Thank you, Milton. Blockchain company, all right. A word on targets, please, so one can have, well, your risk reward is if you see a buy signal and you know that's where they took it at one time, that might be your first target. Now, is that worthwhile? Well, if this was a 4.5% move, you might say, let's find something better. If it's a 38% move, yeah, that's a worthwhile trade. And I'll try to build in targets as we go along here. Oh, shoot, we're already past 9 o'clock. So here's another bullish signal, kind of your inverted hammer signal, gap up through the resistance. So if I owned this, or had bought this on this day, what do I want to see the next day? I don't want to see them opening here. I want to see them opening positive. This is the advantage we have with candlestick analysis, is identifying signals, identifying the breakout, and what the nature of that breakout is. Because, again, the graphics of candlesticks is merely investor sentiment, or telling us what investor sentiment is doing. So whatever happened here would be another reason to go see what the breakout or what the reason was for this move. And then if I was deciding to buy this tomorrow, where do you think everybody's watching to see if it can get through? Obviously the 50-day moving average. If it comes up through there, I want to start buying. And then where would I put my stop? Probably back below the 50, because if it came up and it came back down below the 50, they aren't breaking out. I got to get through some of these. Here's another breakout situation. It tells me if they open this positive. After breaking out, this level is not acting as resistance anymore. I can see I put way too many. Bolt. Look at your little best friend gap up today after flat trading. Where's your upside potential? Back up to the top of this candle, which would be the 50-day moving average. Okay. See if I can get through these fast enough so we're not all dozing off. There's your fry pan bottom. This is what we call a double doji setup. Notice how they took it up. Consolidation. Consolidation. Look where they consolidated to. Right smack dab to the T-line. Hold on to your individual ones until I tell Jim to do the double line. What's a double doji setup? Tells you the bull stepped in. There's profit taking, but the profit taking isn't very dynamic. It's indecisive. That's what a doji is. And then when they open up positive on this day, you can see what the results are. This candle right here is usually the same magnitude as this candle right here. And when you have that whole setup, what's that telling you about this? Tells you your fry pan bottom is still in progress. Or not still in progress, is in progress. Fry pan bottom, an RT or RETO. You can see the trajectory. Probably has more upside. Where's your first target? At least probably coming up here to fill this gap, which at least would put you in a positive direction. Weight Watchers, bullish engulfing. This one you would buy on positive trading tomorrow. Where's your first target? The 50. Genco, a left-right combo. A left-right combo is a bullish engulfing signal with the previous candle being a doji. Anytime you see a doji in a combination of signal, it's used powerfully than just a regular bullish signal. RCI should be, but I'm not. All right, so how do we know which sectors to be looking at going into the new year? Well, obviously, there was starting to be some buying in the electric vehicle sector. There's NIO. There's LI. The silicon stocks like SLI starting to head up. So that gives you a little bit of a clue to watch to see what happens on January, 3rd? Is that the first trading day? To see what stocks are acting the strongest. That will pretty much give you an indication of what the analysis was over this vacation time frame of all the major institutions, what they were planning on buying going into the new year. Now, on the other hand, it might be they're selling off the oils, as we can see in Apache. And we bought puts today on AR. Again, this is what we call observe the obvious. Look where your bearish Harami, bearish doji sandwich, a failure to get through the 50 in the overbought area, and today's selling took you down through the T-line. So remember, when you have a sell signal and a close below the T-line, the probabilities become extremely strong that you're in a downtrend. And if you can look to see that you're in a downtrend, they came up to a resistance level and sold off again, where do you think your first likely targets are? First target, second target, or wave 1, wave 2, wave 3. Again, just put in the probabilities in your favor. What happens to sound? Oh, Terry, is that like a question if a tree falls in the forest and there's nobody around to hear it? Is there any sound? Or if a man makes a statement and no women are around, is he still wrong? So you want to also keep an eye on some of the retail stocks. They might, this is Bison with a bullish engulfing signal. EVGO might be bouncing up. So these are all kind of hints as to which stocks you might keep an eye on coming out of the chute on Monday. On the short side, once again, there's your shooting star failure. Probably looking at wave 1, wave 2, going into wave 3 on Kiva. Again, more of the oil stocks. Look where this one failed, right smack dab at the 50, and they've closed below the T-line. Where do you think your first target's going to be? At least back down here to the 200. LPI. Look at your dark cloud. This is called a dark cloud because it opened above any of the previous day's trading, not just the body, any of the trading, and closed more than halfway down this candle. That's one of your 12 major signals. So if you're learning candlesticks, your process is you learn the 12 major signals. That's the ABCs, the brick and mortar, the building blocks of candlesticks. And then very easily you learn the patterns, the patterns. And then when you start putting the combination of signals and patterns together and using indicators that everybody else is watching, like moving averages and the T-line, not the T-line, moving averages, and then we have the T-line that works extremely effectively as far as a close below the T-line tells you you've got high probabilities you're in a downtrend. So we can pretty much see that the failure on CRK, Comstock Resources, failed right at the 50. Where do you think the next target's going to be? If this is wave 1, wave 2, wave 3, at least to here, and probably could even be further to the downside. Look at your failure. A bearish left-right combo. This is where this is what we call 2+2 analysis. You're up in the overbought area. Where do most people buy? They buy exuberantly at the top. Look how they gapped up. Look how far away you are from the T-line. And then as soon as they hit the 200, on that day when it hit the 200, gapping up in the overbought condition, what do we want to find out? We want to find out whether they're going to go through. So you flip to your 10-minute chart and see what that does. If it starts selling off and starts coming back on the 10-minute chart back toward the T-line or below the T-line, that's telling you they're not going up. That's when you take profits. Now you've got a bearish evening star signal followed by a bearish doji sandwich. Now remember, a morning star signal followed by a doji sandwich is your morning sandwich. That's your McMuffin. An evening star signal followed by a bearish doji sandwich, that's your evening sandwich, or that's your Dagwood. These are high probability result expectations. The doji sandwich by itself tells you there's going to be more downside. The evening star signal tells you there's probably going to be more downside. When you combine the two, that's that much more credibility that the sellers are in control. ISPC. Anytime you see something like this where they took it up, but by the end of the day they took it back down, that's telling you the bears are in control. There's probably going to be more downside. There's your bearish doji sandwich on UUUU, the uranium fuels. There's your big bearish engulfing signal right here at the 200 and right at the same level it topped out before. This one you can be thinking about shorting. Pretty much want to see what happens when it gets to the T-line. Another sector that might be good to watch. Again, notice how they took Norwegian Cruise Lines up and then closed it down here. That's usually an indication there's going to be more downside. And ACRE gives you a good indication that the REITs, the real estate REITs, are probably selling off. Look at the failure at the 200. Which way are you going? You're in a downtrend. There's your hammer kicker type signal. Came right up to the first major resistance level and sold off. There's your bearish best friend, your doji gap down. That tells you there's a lot of force to the downside. Where do you think your first target is? Probably back down here and even further. So everything that you see in a candlestick chart is just common sense that if we see a reversal signal confirmed, that's exactly what the Japanese race traders have made available to us over the last few hundred years. We just can take that analysis and make high probability trade decisions. We were recommending shorting Blackstone, BX, today. There's your evening star signal. An up day, a day of indecision. The third day closes more than halfway down this candle. Yesterday closed it below the T-line. Today it didn't execute. Because what did we want to see today? We wanted to see it open lower and trade lower. It didn't. However, it did a little shooting star doji. What do we know about the doji rule? If they open this lower tomorrow, you want to start shorting immediately, because that means you probably got a bearish doji sandwich after your evening star signal. Just 2 plus 2, putting you with high probability expectations. Okay, that's about all I got. The important factor is we're probably not going to have any picks for tomorrow, because a lot of the movement tomorrow is probably going to be funds readjusting their positions. But we'll have new picks for Monday. And Monday will be a day also to identify immediately which stocks are coming out of the chute with great strength. Those are going to be the ones that are probably going to be bought during the month of January. All right, so we made very good money this year, not because we expected the market to go up or down. It's just we have a much stronger analytical ability to see when things are going up, when things are heading down, when things are heading up, down, up. So right now, we've gotten out of all our long positions because we're in the overbought area and we had sell signals today. Doesn't necessarily mean the uptrend is over, but the probabilities say out they're probably going to do some consolidation back to the T-line, and then you see whether it's going to do a J-hook type pattern or whether it's going to continue. Okay, so with that, are there any general questions on candlestick analysis? All right, if not, Jim, go ahead and do the double line. Try to keep your request to 2 or less so that we're not here until New Year's. Matt, that's a return that you can't really describe because I've got some accounts that I just trade futures and options. I've got other accounts that I trade stocks. But if I had time, JB, didn't we look at Matador before or after the close today? Do you think it changed since that time? Right now, you could be shorting Matador. So I've got some accounts where if I could, and again, this is based upon if I could trade without all the other things that I do during the day, but if you're a day trader or a swing trader and you're trading with stocks and options, don't quote me on this, but my expectation would be to make at least 10% a month. And if you compound that out for 12 months, that turns into a 312% return. Now, are there some months where I'm down 2%? Definitely. Are there some months where I'm up 28%? Definitely. But the whole aspect of candlestick analysis is that every time you put on a trade, based upon what the expected results are of human nature, creating candlestick reversal signals and patterns, the probabilities are extremely strong you're putting your money in the right direction at the right time. And it eliminates all that prognosis of which sectors might be moving strong, or Apple has this new product, they probably should be buying it. I always let the market tell me what the market's doing. Costco looks like it's having a little bit of trouble. Bearish left-right combo today. If this opens lower tomorrow and I was long, I'd close it out. You can see they're meaning kind of a resistance level. McDonald's, same scenario. Roblox, that's kind of a nothing chart. I wouldn't be long or short. Kathy, it took me quite a few months. It took me a long time because I didn't have anybody around to confer with. I was learning everything on my own because back in the late 80s when I was learning candlesticks, nobody knew about candlesticks. So I was learning everything hit or miss. I always tell people back then I didn't have anybody to give me a second opinion on what I was analyzing. The only time I could get a second opinion is when I'd go to the doctor. I'd say, "Doctor, what's wrong with me?" And he said, "Well, you're fat." I said, "Well, I think I want a second opinion." He goes, "All right, you're ugly too." So another thing that I tell people, out of the signals and patterns, there's 12 major signals. Those are your building blocks. There's about 8 different patterns that are very recognizable. It doesn't take long to learn all those. And then there's what we call the top rank signals and patterns, which is like your doji gap up, your best friend signal, or your left-right combo, or your kicker signal. And I tell people you don't have to learn all of them expertly right off the get-go. I always tell people learn 3 or 4 and become an expert by knowing what makes them confirm, how long do you stay in them, when do you get out. Now you're not at the whim of the market or anything else. You can analyze what's actually going on in that individual chart. So the nice thing about our chat room is every single day we've got approximately, I don't know, 150, 180 people in there. But there's usually about 10 or 12 that do a lot of the talking. And all you have to do is latch on to some of the people that put out ideas. So the chat room has a double benefit. First of all, it allows you to learn a lot quicker, kind of expedites the learning. And secondly, you get a supply of good charts to look at. And if you don't know why, you simply ask, why would you be buying XYZ that you recommended or somebody pointed out? And they'll come back and say, well, it's doing a J-hook pattern off the 50, and it's confirming. So it allows you to learn candlestick analysis much more rapidly than I did. QB, another one that's running into problems right here. If this opened lower tomorrow, I'd close it out. Now, opening lower tomorrow is going to probably be a function of the market itself opening, or the general market trading lower. Light speed, you could be buying this one. It needs bullish confirmation. If I was buying this one on positive trading, I wouldn't want to see it close back below the T line. And Unity, nothing very strong there just yet. What do you use stochastics as the bottom graph? When do you use? Again, very simply. A candlestick buy signal in the overbought area doesn't mean anything. It's just a continuation of a trend. You're looking for a candlestick buy signal in the oversold area. You're looking for candlestick sell signals in the overbought area. And that's about as simple as it gets. You don't have to be a sophisticated analyst to use those simple rules. LXP, all you can do right now is stay long as this stays above the T line. Charge point, you could get ready to buy this one. We're keeping an eye on the anything related to the electric vehicles. This is QuantumScape. Blink might be bottoming out. Fuel cell, nothing there yet. Now it did gap down in the oversold area, so you can start watching for buying, but I probably wouldn't pay attention to this one until it gets back up above the T-line. Myra, you could be shorting this one if it opens lower. You can see how you had an evening star signal continuing your downtrend. And HGEN. Another one that if I was short, I would probably, well, you wouldn't be short because it's below $5. I wouldn't be buying this one until it does close above the T-line. Again, that close above the T-line just greatly enhances your probabilities. Nothing great here yet until you see some more buying, but you do have a breakout, so you know there's more interest coming into this stock. This one, look at your bearish kicker signal. Notice when they did a kicker signal, closed up here, they gapped it down, and where did they take it to? Right to the first major support level. Did a bullish harami, which told you the selling had stopped, but now they're rolling it over. Where would be your likely target? Back down here to this level. I'd be ready to short. Yeah, Ralph, all I had to do was read one word further. Yes, I'd be shorting. Gold started to pick up some strength today. This is gold in the January contract, still moving up higher. Whoops. And this is silver, still maintaining its uptrend. Notice how the uptrend started. There's your kicker signal. Are these used for trading and not holding the shares? Jenny, no. These are used for any time frame. If you're a day trader, you can use the 1 minute, 5 minute, 10-minute combination. I'm a swing trader, so all my trades usually last anywhere from 2 to 10 trading days. So I'm buying positions based upon a daily signal. And I might hold those positions, might close them out the next day if it doesn't work, might hold on to them for 10 days, might be longer if the trend lasts longer. So they're used for any time frame, whether you're a day trader, a swing trader, or a long-term investor. Dick's still working because of the fry pan bottom, and that was basically the reason we recommended HIB. Same sector. AMRS, nothing great here yet. You still need to see more confirmation. An ATVI, fry pan bottom, and what is everybody else watching? They're watching the fact that it came up through the 50. So if you're at a fry pan bottom, how long do you hold this? As long as you don't see a sell signal and a close back below the T-line. Boeing, that's a nothing chart. I would not be long or short Boeing right now. CrowdStrike, that's not going anywhere. I'd be someplace else. No direction. CVX. I'd close out CVX on a lower open. Again, that's a nothing chart right now, not going anywhere. ABB, you stay long, except you had a little gap up shooting star after a J-hook pattern. So where do you put your safety stop? I'd probably put my safety stop at the halfway point of this candle, because if it opened lower and traded back down through there, which means that we'd be trading back down below the 3T line, that would tell you the bears have taken control. I thought we did fuel cell. Fuel cell, nothing. If you had been short, I'd think about covering the short, but I wouldn't be going long on this one. Whoops, where did that go? Short on weakness? No. That's a nothing chart. I would not be long or short this one. No direction. What you want to see on a short is a force that's moving it one way or the other. Now, at least on this one, you can see you had an evening star signal, then a doji. So if they open this one lower tomorrow, what's it telling you? You've got an evening star signal, now a doji sandwich. What do you think's happening? Wave 1, wave 2, going into wave 3 to the downside. JDX, you could be buying this one, and JNUG, you could buy this one. If I was buying this one on positive trading, my expectation on this little J-hook would be at least they're coming up to the 50. If I was buying on positive trading, I wouldn't want to see it close back below the T-line. Again, all probability factors of where it should be going. HIMX, you can see the fry pan bottom breakout. And how did it break out? With a doji sandwich. What's a doji sandwich tell you? There's more upside. What's the fry pan bottom breakout tell you? There's more upside. You stay long until you see a buy or a sell signal. Bristol, if you're long, the problem with something like Bristol is it's an institutional trader, which means it's not going to move with any great percentage vitality. If I was long, I would just keep a safety stop below the T-line. Futu, nothing great here. This is not a reversal signal. This is just an up day. It might be heading higher, but it would probably be something I'd leave alone just because there's no major direction to it right now. Nugget, here's one you could buy if it starts trading up through the 50, telling you got a J-hook pattern breakout. SIG, not anything wildly exciting. You definitely need to see bullish confirmation on this one. Gold is in Barracks. You could be buying this one. AU, you could be buying this one. Eldorado, you could buy this one if it opens positive tomorrow, giving you kind of a bobble breakout. A bobble breakout is a more defined J-hook pattern where you can see when they were selling right at the resistance level, came back to the T-line for support, and now coming back up through the resistance level. If this is wave 1, where does wave 3 take you? Up here to the 200. Nokia, if this opens lower tomorrow, I'd close it out and wait to see what it does back at the T-line. Under Armour, nothing wildly exciting here. You can see when they just got up through the T-line, they did it very indecisively. So that doesn't tell me there's anything on this chart that's really that extravagant. Which means if it opened lower tomorrow and I was long, I'd close it out right away. ENPH, that's a nothing chart, no direction. Uh-oh. I just did FSII. Is it FSLL? FSII? No, that one's not coming up. Did we not do DNA? DNA was one that when it broke out, if you stayed long, you wanted to see it open positive, which it did. Stay long. If I was long right now, I'd just have a safety stop at today's open. It shouldn't come back through that level. If it does, the profit taking has started. CVGI, you can stay long on this one. That's a good looking chart. And ARKKK, nothing. Just not enough direction on this one. I don't know what SH22 is. Soybeans. Okay. You want to go to the March contract. You can see the doji, and it sold off hard today. Now it's right back to the T-line. This was a good trade, except I would have been more trading this contract, because you can see the doji, and when it started trading lower, especially through this level, you knew exactly where it was heading to, back to the T-line. So right now you want to make sure that can get down through the T-line. BFRI, you stay short on this one. LGVN. If you're short, you stay short. EX or XERS, that's kind of a nothing chart. Lance, you still need to see roadblocks get above the T-line and probably the 50. Right now, there's nothing real magical about this until you see enough strength to break up through this level. Tesla, again, could not get up through this resistance level. I hate that thing. Trading lower. If I would have been out of this, I might have been out yesterday, but when it came up, say, no, it's still holding up, still has a possibility of coming up through here. But then when it started trading back below today's open, that told me the sellers are still there, close it out. Bouncing down from the trend line and heading to the bottom, you don't know. First of all, you got to see it get down through the T line to make that assessment. ATVI, you just stay long. I'd probably use the 50 as a stop. ABBV, you stay long, but put a safety stop in. You're in the overbought area. Anytime you get into the overbought area and you start seeing potential sell signals, put a safety stop someplace where it shouldn't be trading. Again, we're not trying to buy at the absolute bottom, and we're not trying to sell at the absolute top. We're trying to get that high probability fat part in the middle. We want to make our trade ratio as strong as possible. Yeah, anytime there's a horizontal price move, you don't pay attention to it until it gets out of that price move, or that trading range. Matt, that could be, but remember, we're not trying to figure out what's going to act strong all through 2022. We're trying to just figure out which ones are going to act strong for the next trade. It might be gold starts moving back up, or the gold stocks start moving again. Thank you, Lee. Let's see, is this natural gas? Whoops. Looks like that's Nordic tankers. I should know natural gas. NGAF22. Natural gas. Nothing of any great consequence here. Some have said ZO is the mother of ag futures. I don't know if that. I don't even know what ZO is. All right. And Southern Copper, look how it's running into trouble right here with a shooting star. If I was long this open lower tomorrow, telling me that this level is acting as resistance, I'd close out the position. Oh, crude oil. Crude oil's been in a decent uptrend. Whoops, FCL. This is a February contract. So it's been moving up nicely. Oh boy, let's see. I haven't traded oats in a long time because it's so boring. Snap, that's kind of a nothing chart, no direction. COEH22. Oats, that's very lethargic. I don't know what to tell you there. It's just not enough movement. AAT, whatever that is, you could be buying on positive trading tomorrow. Oh, I forgot to even look at Lucid today. That might have bounced. So watch the electric vehicles. Good food signals is right. We got stick sandwiches, doji sandwiches. All right, everybody. We won't have any picks for tomorrow, only because there's probably going to be a lot of portfolio shifting, so it's not going to tell you if anything's being bought or sold on a permanent basis. Peloton, if you're short, I would have covered the short today, but I wouldn't be going long just yet. That's right, McMuffins, Dagwoods, doji sandwiches. All right, everybody. If we don't see you tomorrow in the chat rooms, we'll see you next year. Happy New Year, everybody.